Hello. This is Ara, and this is Rozara's Investments. And I haven't made a video in a while, but I'm a little bit inspired to this morning because of this company that I own. The symbol is YRD. And when I was planning on making this video, I wasn't going to tell you the symbol right away, but some people like to look it up while I'm talking. So the symbol is YRD. So this is a little Chinese company, and the business involves peer-to-peer lending. They have investors, they have people that want to borrow money, and they kind of get these people together so that way the investors can lend the money to the borrowers. And generally this is at a high interest rate. It depends on your credit rating or whatever. And I think the new regulations allow it to go up to about 24% a year, but I'm not 100% sure on the numbers because it's kind of hard to find exact information from China. But just to generalize, it's investors lending money to borrowers. And this company takes a little bit from the investors for services rendered, and they take a little bit of money for borrowers for the access to the money. And they're kind of a middleman, and I guess they're kind of a technology company because they find most of their customers online and through mobile. So the reason why I love this company is because this company has been growing revenue and growing sales for four and a half years now. So I found the numbers back from 4 years ago. They had something like $30 million in revenue, and then they had something like $200 million in revenue, and then they had like $400 million in revenue, and then 2017 they had over $800 million in revenue. So this company has been growing like crazy, which is the reason why I found this company, which is the reason why I'm invested in this company. And the reason why I think it's a great investment right now is because that when I invested in the company, it was about $30-something a share. And then when I reinvested in the company, it was down to $29 a share. And now this company is $23 a share. So at $23 a share, this multiplied by about 60 million shares, this works out to a valuation of $1.4 billion for the whole entire company. That's like the amount of money Apple makes in one day. It's ridiculous. So this company has become a very, very small company. So it's valued at $1.4 billion. Why is that super low? One of the main reasons why I think this is super low is because, first of all, this company last year made over $200 million in profit. If you exchange the Chinese yuan to US dollars, they made over $200 million. So how much would you pay for a company that was going to make $200 million every single year and never grow? I think a reasonable multiple for that company might be 10 times. Maybe you'd want to pay $2 billion for that company. But the thing is, this company is growing. They have 65% more loans than they had a year ago, or 65% more dollar value. I forget the exact numbers. Everything's between like 65 and 72%. But the point is, this company has ridiculous growth. They have way more customers. They have way bigger total dollar value of loans that are outstanding. And they have so many great things going for this company. So considering that this company is growing like crazy, I don't think it deserves a 10 multiple. I don't think it deserves a $2 billion valuation. I think this company maybe deserves a $6 billion valuation. I think this could be a company that we can value at 30 times earnings, maybe even 40 times earnings. At 40 times earnings, that would be an $8 billion valuation. And I think that would be a much more reasonable number for a company growing at this rate. This is just awesome. And I do have my money where my mouth is. I have 400 shares of this company. It's under $10,000 worth now, but when I originally invested, it was over $10,000 worth. And I do not think that I can predict the future. I don't want to say that I can predict the future. But if I had to guess, and I have put my money where my mouth is, if I had to guess one company that can go up 400% in the next year or two, and 400%, so 300% would take it from around $25 a share to around $100 a share. So 400% would be around $125 a share. An $8 billion valuation would be around $133 a share. So if I had to guess one company, if I had to put my money on one company that I think can go up 400%, that is going up 5 times what it is right now, I would bet on this company, YRD, and I do have my money where my mouth is, and I do plan on staying invested for the long term. One of the big reasons why the share valuation is down is because investors are worried about new Chinese regulations involving loans. And I'm not an expert on the topic, but I think America went through this with places like, I don't know what they are, MoneyGram or Money, whatever, where customers go for short-term loans. And America, had to have extra regulations to protect the borrowers. And I think China's going through something similar. So they're doing stuff like they're capping interest rates in certain situations to 24% a year and other stuff like that. But that being said, Yarendai is still adding customers. They are still giving out more and more loans. They are tightening their policies to who they lend money out to. And their default rate, while it is up slightly at one risk level, they had 2% of customers that were like 30 days past due. You can look up the numbers on their last earnings transcript for their last quarter. But about 2% of the loans were past due in a certain like high risk default category. But compared to the amount of interest that they are collecting for their investors, this is still a very good investment, an extremely good investment. And that's why I think they are getting new investors, why I think they're getting new borrowers, and why I think this company will continue to thrive through 2018, 2019, and 2020. So I'm definitely going to hold on to my shares. Again, this is a very small company, and it is very risky, so it's not for everyone. I am down over 20% right now, but I have been through this before, and I completely do expect to be up within a year or two. I expect this to be well over $50 a share. I'm predicting at least a 100% return from this point forward. So this is the second week of June 2018. And I wanted just to give you guys a solid recommendation, a solid stock recommendation for those of you that don't mind taking a little bit of risk investing in a small company that is absolutely growing like crazy. And the cherry on the cake is that they do pay a dividend. They've paid 2 dividends in the last year. So I think it's kind of rare to see a fast-growing Chinese company that actually pays dividend. And in my mind, this is actually proof that they're making some money and they have some excess money, excess capital that they don't need. So, I mean, what else can I say? Check it out, YRD. I think it's a great small cap investment. And if you want to get returns of 400% or even more maybe, then you have to invest in these small cap companies, because if you invest in a big company like Alibaba, like Tencent, one of those big Chinese companies which are relatable to a company like Amazon or Facebook in America, you're not going to get 400% returns, because that would make them $2 trillion companies. So if you really want to get those big 400% returns, then you have to invest in small companies. And I think YRD is a great choice to get started. Buy a couple shares today and hold on to them for a couple of years and thank me in the future. Bye guys, enjoy.